But it'd be a real step up for Uber's quest to build a WeChat-like super app, wouldn't it?
Yeah, big time. I think that's where everyone's mind went when they heard the rumor that, okay, well, this is Uber's next step in building out this kind of
Mm,
everything app. And
yeah.
they're not shy with their intentions of it at all. So
Mm,
Kuroshahi, he told the Financial Times last week, he said, I'm quoting this, anywhere you want to go in your city and anything you want to get, we want to empower you to do so. Now, that's not as extensive as, say, something like WeChat with messaging and payments and social media, but it's trying to
mm.
kind of cover everything else. Hi there, and welcome to Stock Club, podcast brought to you by MyWallSt. I'm Mike, and joining me today is MyWallSt's chief investor, Emmet Savage. Emmet, how are we doing?
How are you, Mike? How are you doing? What part of the world are you in today?
I'm in London, and I'm basically house sitting for a mate. He's gone off to Australia, and he was like, "You're moving around. Do you want to live in London for a month?" So I'm up
Oh,
in
man.
North London. It's lovely. Yeah, I'm a bit frazzled this morning. I had a bit of an IT project before getting on here. I've never seen it before. It's like your computer saves up all the bad stuff that happened until Wednesday morning, right before we were about to
Yeah.
record.
Oh,
Um,
we've seen it. I think our listeners should have realized that you are a digital nomad, maybe a gun for hire. So maybe you should just have a sideline where you mind houses.
well, there's apps for that and everything. Yeah,
Ah,
apparently you can go and, like, I don't know. I think you have to pay to sign up and stuff, but you can go and you'll be a house sitter or a cat sitter for a couple of weeks, live for free in New
yeah.
York or London or Paris or something.
I have a sister-in-law who lives in Midtown Manhattan who would do anything to have someone go mind her dog for 2 weeks and live in the lap of luxury. And I was saying to my wife, yeah, but you have to mind the dog.
Yeah.
The dog is hard work and you're not going for a free holiday. This little doggy is at end of life and probably has all those end of life problems.
that's there's like, it's one of these stories that's been told so many times, and it's always someone's cousin or someone's mate. But have you ever heard the story about I'm not going to tell it now, but people will recognize it, about the dead dog in the suitcase falling down the stairs? No.
No, I don't
No.
know that
I think
story.
it's one of these urban myths. It's one of these, like, 20-minute stories you tell when you're drinking a load of pints. People listening will recognize it, anyways.
Right, right.
And if someone said it was their cousin or their mate, they are lying to you, because
Ah, yes,
this
exactly.
story has been repeated. I've heard it from 5 different people, and it's been 5 different cousins. So yeah,
Yeah, and actually, there's a story that floats around in South Dublin about this girl who saw Bono in a restaurant in his town and asked the guy he was sitting with to take a picture of them both. And it was Bruce Springsteen who took the picture of them. And I've heard this story so many times from guess who, my cousin or my friend, or
yeah.
it's just too close to be actual real. I doubt it very much.
Okay, so let's get into this show. You're going to kick us off with a teaser we have coming. So this
Oh,
time next
yeah.
month, we got Nexus II on the horizon.
We sure do. Sneak peek. We still need to get the jingle for sneak peek. I have it in my head. I just need to get a synthesizer and learn how to play it. Anyway, yeah, a year ago we released a product called Nexus, as you well know because you're involved with the development team, and it came after 2.5 years of research and build, I say. And as we said at the time, there's about 58,000 companies listed on 60 exchanges around the world, and a handful will grow 100-fold or more. Just one of those is required to change your life, and Nexus is built to find it. Well, the early signs are that Nexus 1 is a success. It has trounced the average return of the S&P 500 with the 15 stocks it identified throughout the year. And it looks like most of these businesses are just beginning in their growth journey. Well, we've improved the product and we're launching Nexus 2 in November. Again, it fuses state-of-the-art AI, screening, and real human intelligence to identify companies that, for the most part, are unheard of but have giant potential and strong momentum. And I know the first six, and I know I encountered one of the six brands over the last week in Budapest, and I was delighted with the experience. Anyway, we're capping membership at an absurdly low level. Members will get the next cohort of stocks, which starts with the six amazing businesses and releases more in the months that follow as they're identified and deeply researched. We do have an early bird pricing plan. So if you want to be on the list, please email pod@mywallstreet.com. You don't want to miss this, folks.
Perfect. Okay, and that's MyWallSt, MyWallSt.com, just in case people
Yeah.
are
Do you know,
typing
we
out the
also own the
frustration.
other. Yeah, you're right. It's a pity. I hate having to spell a name, and I've gone through a life spelling Emmet. So
Yeah.
there's only one T, folks.
Okay, so that's Nexus 2. Nexus 1 was a great success. If you want to get involved, just email at pod@mywallstreet.com. Where are we going first? Emmet, you have been researching the IPO market, that's correct?
I have, yeah. It's a while since we discussed them, and I thought it's a nice one just to revisit because IPOs are the lifeblood of our business, my Wall Street's business. And I'd like to start at ground level, just to remind our listeners that an IPO is an initial public offering, and it's a process by which private companies offer shares to the public for the first time by putting them on the stock market, which is like the grocery store or the supermarket for businesses, and it allows businesses to raise capital which they can use for any number of things, which one would hope is related to making the business bigger and stronger. And we've spoken at length in the past about how companies usually spend their newfound cash, the big check that follows after they IPO. They usually pay down debt, expand products and services into new markets, and all that kind of stuff. And they usually have a stonking party as well that results in a ton of alcohol and remorse and resignations and all that stuff. Because I've heard of a few IPO parties, and you're thinking, I would stay on the water that night because. So IPOs. Let's talk IPOs in Q3 of 2024. In other words, now there was a 14% drop in IPO volumes year over year, which means there was 310 IPOs in the third quarter of this year. And I'm talking about IPOs in the USA, and that's a 35% decline in proceeds, the amount of cash raised quarter on quarter, year on year, which amounted to almost $25 billion. So about 25 billion bucks went from the pockets of buyers into the coffers of the companies that IPO'd. But Q3 of this year outpaced the first two quarters of the year, which shows a recovery in the IPO market, which is why I sent you a Slack last night saying I think it might be an interesting one to discuss. And one of the major factors shaping the IPO landscape in 2024 has been the commencement of global interest rate easing. Now, in the old days of radio, when most people heard the words global interest rate easing cycle, they could change the channel really easy. But it's not so easy with a podcast. So you're stuck, folks.
Don't tell people how easy it is to turn off our podcast, Emmet. It's
Okay,
literally
well, I'll say this bit quick.
one
I'll
button.
say this bit quickly because it's really, honestly, everyone hates a global interest rate easing cycle conversation. Look, it's basically there's a shift from a period of high inflation in recent years. That's it. So as inflation goes down, economies pivot towards growth, and lower interest rates are reducing the cost of capital for companies, which, as you guessed, creates a more favorable environment for IPOs. And that's why they're on the up, more or less, especially in sectors where previously the higher interest rates meant higher borrowing costs, so made it harder for businesses to get money. And those kind of businesses were in health and life sciences and technology and real estate, financial services, et cetera, et cetera. So basically, bottom line is lower interest rates are expected to encourage more companies to go public. And as usual, the USA is king. It's the one where most IPOs happened. But what I found really interesting was that 52% of IPOs in America in exchanges or exchanges in America in 2024 so far came from foreign domiciled issuers, which
Yeah,
is a 20-year high. So that says that America is the growing preference as the listing destination for companies from China and Hong Kong and Singapore and
in Ireland.
Australia and Ireland.
Yeah,
Oh, absolutely, and Ireland and countries that have, I would say, slightly less developed stock market system. Another interesting trend is the recovery of mega IPOs, which is businesses raising $1 billion or more. Again, especially in America. Have you heard, Mike, by the way, of a company called Lineage Incorporated?
no.
No, neither had I until I dived into it last night to prepare a few notes. They had a $5.1 billion IPO recently in the US, it stood out as a monster, but for some reason we missed it, or at least it didn't hit the radio waves here. However, despite the uptick in large IPOs, the number of unicorn IPOs, which is private companies that are valued at over $1 billion, has decreased from 13 in 2023 to 8 in 2024.
Yeah.
So that kind of trend that was hot about, the unicorn, a business that grows super fast to $1 billion in value, seems to be somewhat waning. But the real elephant in the room is that investors have grown more cautious following underwhelming post-IPO returns from a whole load of high-profile unicorns in 2023, with the net upshot being that some companies are delaying their public offering until market conditions improve. Now, no surprise, one area of continued momentum is AI-driven IPOs. So
Makes sense, doesn't it?
it really does. There was over 60 AI companies have gone public over the past 2 years, and about half have achieved profitability. In 2024, the market cap of AI companies listed in the last 12 months nearly doubled compared to those listed in the previous year. And there is always a hot trend. I remember many years ago when I started writing for the Motley Fool, and I thought it was at least 20. I think it was post the dot-com bubble. I can't remember what bubble it was, but I was asked to find a great investment. And I said to Bill Mann, Bill, I don't think there is a great investment out there. And he said, there's always a great investment. There's always a trend. Like in hard times, does Dollar Tree or Aldi or Lidl in today's parlance, does that look like a good investment? And the answer was yes, there's always a hot trend. And the hot trend of today is AI, and everybody knows that. So looking forward, the remainder of 2024 is expected to see the IPO market influenced by central bank policies, of course, several high-profile wars and conflicts, and a certain election, which we don't usually discuss and we're not going to discuss now.
Yeah, it's interesting, and I think more so 23 was okay, 2022 was awful, and then 2021 and the end of 2020 were an absolute just deluge of new companies and big
Yeah,
high profile public debuts as well. So it's
yeah,
really kind of fluctuating now and trying to find a new level. But
yeah, that's
say
right.
out of the last 6 months, what IPOs have been successful? Because I haven't really heard too many stories.
Yeah, it's a good observation. I mean, there's really been two categories. There's two categories, I think, for the answer to that question. The first is what companies have done best that you've heard of, and then which ones have actually done the best. So I'm going to kind of split the answer in two. Well, there's two companies you might know, top of the pile in the pseudo first place, not really the first place, but in the businesses that you know that have done well is Reddit, and its shares are up 130%
Yeah.
from $34 to nearly $80 today.
And
And
interestingly, a lot of that's from AI hype as well.
interesting. Do you know anyone who's a Reddit devotee? Do you use
Dev-
Reddit often?
I use Reddit. I wouldn't call myself a devotee, but
Hmm.
it has that community, I think. Yeah.
Yeah, it's funny because I've in my digital life, and I've only ever lived a digital life in the professional sense. I've really not found anyone who says, "Oh yeah, Reddit is my place. That's where I go. That's where I use it for A, B, and C." It seems to be just kind of this. It'd be ridiculous to call it a niche, but it's not hyper mainstream.
Yeah. Well, I think it's built on niches, if that makes sense. So you would go to
True.
Reddit for, your investing kind of subreddit or X or Y, or do you know what I mean? So it's kind of,
It's funny. I don't know if I've even ever used it. If I did, I Googled something and clicked, and I kind of have a loose memory of just the logo and it not having a very nice UI. But it has 100,000 active communities.
yeah.
So I mean, like seriously, 100,000 communities for every topic under the sun, I expect. And despite its popularity, interestingly, the company is not even profitable, and it continues to invest in its user growth and advertising infrastructure. And I think it did about 450 million in ad revenue last year, which was way up in the previous year, which is hardly surprising because it IPO'd. But so that was the first of the two companies I spotted that IPO'd in the last 6 months that I think most of our users will have heard of and has done well. And the next one, serendipitously, serendipitously, is that the right word?
Serendipitously. That
Yeah,
sounds
thank you.
wrong.
That one.
Serendipitously.
No, it sounds right to me. Right in, folks. Pardon by Wall is Viking Holdings, which is I think better known to most people as Viking Cruises, which operates in the luxury travel sector, primarily focusing on river and ocean cruises. And its stock has been on a complete run. It's up about 50% post IPO, thanks to growing demand for high-end travel experiences. And it reported $3.5 billion in revenue in 2023, which was a recovery year, not the first recovery year, but it's definitely a recovery year. And it still faces challenges in consistent profitability. It's still led by its founder, a guy called, I think it's Torgen Hagen or something like that, a real Scandinavian name. And he's the CEO and he's the founder and all the rest. But through a sequence of very unplanned events, I was on a Viking cruise last week. I didn't buy it, I didn't book it, but my wife and I ended up on one.
Were you
And
rescued by it or something? How do you get on a cruise? How do you get on a
yeah,
cruise by accident?
I was canoeing down the Danube and I did an Eskimo roll that didn't go so well. And next thing, a rope came down and Viking was looking on it. Yeah, no, I'd love to talk about the whole experience, probably separately on a different podcast, because it has floated to Dumch. It has
Yeah.
floated, and it is a wonderful business. The customer experience was amazing, absolutely amazing, and I would never have signed up for such a holiday, only for the sequence of events where I was pulled out of the slump. And it is so high touch. Nor would I have paid so readily. It's an expensive ticket. Anyway, there's conversation to be had about Viking. I'd love to share it on the podcast. I think it's very interesting. They've really nailed a wonderful formula. It's like a Swiss watch when it comes to precision of customer experience. I was amazed. The only downside I would put, and it's not even a downside, was that my wife and I were the youngest by at least 20 years.
Yeah, I can
And
imagine.
yeah, but it's amazing because the cruisers, the passengers have lived their life. Everyone was American except for my wife and I. And everyone was at least 20 years older than us, but they're wonderful people because they're worldly, they're traveled, they're mature, they're healthy enough. They have a few books behind them and we had so many interesting conversations. So it's certainly not a minus. Absolutely, it's a plus, but I would wait a little while before doing my next one because we were young, fresh meat who I felt very objectified. I have to tell you, Mike, it was pretty
Yeah.
embarrassing. But anyway, no less about that. But I'll tell you about Viking on another podcast. So let me move on to the actual top performing IPOs over the last 6 months, which, by the way, may not be definitive, but it's the best that I could do. So the listeners might go, no, there was ABC Corp or Acme Bricks did better. But I use NASDAQ's website for IPO information. First up is Primega Group Holdings, which through its subsidiaries provides soil and rock transportation services in Hong Kong. I mean, why didn't we all see that coming? It's like, oh yeah, I hope the company eventually goes into soil and rock transportation, especially in Hong Kong when they do. I'm buying shares in that. That sounds like an opportunity. Its market cap is only 400 million. And so it's up about 4x in the last couple of months since it IPO'd.
Yeah.
Not a lot you can say about that except there's money and moving stones in Hong Kong, and who could have seen that coming? Nexus, by the way, would have seen that coming, but I'll leave that there. Casual flex. Next up is Nano Nuclear Energy, which operates a microreactor technology, and it's actually very interesting. It's a company that's developed a thing that is called Zeus, great alpha male name, which is a solid core battery reactor. And then it has Odin, which is a low pressure coolant reactor. Now, unless you're a total nuclear energy nerd, all of these words just sound like some kind of weird Scrabble that fell down the stairs. But it's developing a high assay, low enriched uranium fabrication facility to supply fuel to the nuclear reactor industry. That's a tongue
Yeah. Well,
twister.
it's
Can you imagine?
not surprising to see nuclear up there. Like, there's been such
Yeah.
hype, even in just the last month. You look at any of
Mhm.
the uranium stocks or nuclear stocks; they're all up at least 100%.
You're absolutely right. It's listed on the Nasdaq, as is Primega, by the way, and it's up over 8x, eightfold since its IPO, which is really a great result for those who bought post IPO. And as the founders of the business or the management team probably feel a little cheated because they left money on the table. And for our listeners' purpose, before you IPO, there's a sequence of engagements, discussions, debates, and advice that you take on your business as to what IPO price you should issue. And you look at what's your current state of play and where are you hoping to bring the business and what price would be appealing to public. When it goes up 8x, you got it wrong.
Yeah.
You
You
just,
got it. You
you
got it
know,
wrong, but you also IPO'd however long. A couple of months before Microsoft, Google, and Amazon have all said they're investing
yeah,
heavily in nuclear.
that's right.
So, there
That's,
there is that
yeah, that's true. That's
uh,
true.
exterior element that you can't control.
You're right. So again, it's not one that you would have been waiting for or watching. And on that NASDAQ.com website, if you just Google NASDAQ space IPO, you'll see the website, the web page that shows all the IPOs that have happened in the previous weeks and months, and the ones that are slated to happen in the weeks and maybe months ahead. It usually doesn't roll much further than 4 weeks ahead. The pricing mechanism doesn't really go out that far. Um, but again, there are two names that would have completely slipped the eye, and then the third, and just to keep it offbeat, is a company called Mottison's Jewelry Limited, which is involved in the manufacturing and retailing of jewelry in India, and it sells bangles and necklaces and basically anything that you can hang off your body, and it sells it online. So it's up about 3x. So in the last 6 months, there aren't a lot of businesses that have had stellar performances. And I could really, as I said, only find two that I'd be quite certain all our listeners have heard of. And the three that appear to have done best to my eye, I'd be quite certain most people have not heard of. So, so that's the IPO market, certainly over the last 6 months.
Yeah. So what about the next 6 months there? Are any of them that you can see on the horizon coming? I know, do you remember we talked about Wiz?
Mm,
Google was set to buy it, and then they said, actually,
that's right.
no, we're going to go public ourselves. Is that on the horizon?
Yeah, actually, so they've said it is, but there's very little else other than that. And as you can see, so from Primega and Nanonuclear and Mottison's, the best for short-term returns are very unpredictable. But for the long term, businesses have very distinct attributes that, again, we've codified into Nexus, but we've codified into the way we think and discuss here in MyWallSt, and the stocks we buy exhibit the attributes of long-term growth. And the real kicker is that most people, and I've learned this the hard way with Horizon, is people feel huge dissatisfaction if a stock they bought doesn't perform in the weeks and months following that purchase. And you can say to someone beforehand, give it 12 years, but that's no use if 4 years later you're down. Doesn't mean you were wrong, just means that the market hasn't reflected that value. But so when it comes to IPOs coming up, I generally don't get excited about IPOs, as I prefer to see businesses out of the traps for a while and the business adapt and the management team get used to public life. And the only one I loved before its listing that I can recall over the last maybe 8 years was Airbnb. That's the only one where I read the S1 and said, "Oh yeah, I want that business." Stripe is one that jumps to mind because apart from being Irish founded, or at least having Irish founders,
Yeah, it's
uh,
a gray
yeah,
area, isn't it?
I will take credit for it.
100% would take credit. Jesus, have you seen our soccer
Well,
team?
Ireland
They're
gets
all
Stripe for it.
English.
What are you talking about? It is Irish. Irish. I can't even say it. I'm so it is Irish. So yeah, of course. So then there's Databricks also jumps to mind, which is a company riding the AI wave. Surprise, surprise, and it's a software company focused on data and AI platforms. There's also Shein, which is a Chinese fast fashion giant that's reportedly targeting $66 billion
Oof,
dollar value.
I'm gonna
Yeah,
pass on that
giant.
one.
Yeah, and you're right because the supply chain, what's going on backstage is always worrying when you hear about fast fashion. It's just yeah, it reeks. But when I look at the Nasdaq's list today this morning for confirmed and upcoming IPOs, none are familiar to me. I have it here in front of me: Ingram Micro Holdings, Geltech Limited, Lee Bang International. That sounds like a restaurant. Lee Bang. Let's go to Lee Bang's. Aldel Financial, Ginseng Technology. Honestly, all of these read to my eye as Chinese or at least Asian, maybe like they don't. Whatever the verbiage is, they just look like they're Chinese to me, like Hoo Tech International, HU Tech.
Yeah, I mean, I
Um,
think that's a fair guess.
yeah, so that's it. There's nothing that's absolutely confirmed that I've heard of or looks interesting to me. Then the rumor mill, of course,
Yeah.
is there is there for all. But no, there's nothing that I'm sitting and waiting for.
Yeah, I tend to agree. I think Wiz really made an impact we talked about it last year at the Horizon Live event. Shane Curran from Evervault,
Mm,
it was funny, he name dropped it as a company that, like, to keep your eye out when it does go public. And then it had the
yeah.
big rigmarole with Google. So that would be one, but I assume way too hot to handle when it comes out. And then
Oh, yeah.
one I would kind of anticipate, because it's been threatened for a while, is Flutter Entertainment. I think Flutter want some form of American listing because they're over on the London Stock Exchange and they're getting nothing like the multiples DraftKings is getting over here in America or any of the other betting companies. So
Mm.
whether it would spin off FanDuel and let FanDuel have its own IPO, or if it would come over and have a full IPO of Flutter and a US listing. I'm not sure what would happen there, but I would expect something like that to happen.
Yeah, that is interesting. And those gaming companies invariably do very well because they just print money. And yeah, it's a debate unto itself, really.
But that was good. It's a good recap of what's happened on the IPO market. I'd say it will pick up as rates go down as well. Hopefully, anyways, because we do need a new influx of companies to talk about on this show.
We do. We do. It is our lifeblood. And that latest cohort that are locked and loaded for delivery, honestly, unless they're doing something truly magical, I can't imagine us getting, doing a deep dive on Lee Bang International.
Yeah, well,
I mean, it might be the
depend.
best restaurant chain ever. Might be something technical. You never know. Mike, let's move on. Speaking of
No,
technology, a business that,
I wanted
what?
to. I completely forgot to do this at the intro.
Do it, do it.
I want to do our quarterly check-in on Netflix. I completely skipped it from our notes.
Oh, yeah, yeah. Tell me. Oh, tell
Yeah.
me what happened. Netflix
So we're
says
going
you
to
got
do
to
like
lose watch.
2 minutes because we do it every month, every 3 months on this show. Netflix earnings were a week late, but just knocked it out of the park again. 5 million new
Yeah.
subscribers, revenue up 50%, free cash flow up 16%. The ad tier is growing at 35% quarter over quarter. Not year over year,
Whoa.
quarter over quarter. I think it was 34% last year. It's now making up more than half of signups in the areas where it's available. Operating margin went from 23% last year to 30% in Q3. Stock was up, I think it was 11% after the
Yeah.
call. So I think
Yeah.
you're like Cheshire Cat over here listening to these
Yeah.
numbers. You've got to be happy
It,
with
it
that,
had
though.
pulled back a little bit before the earnings release. It kind of was hovering around $700 a share. It pulled back to something like 680, and then it did pop indeed, which net meant it was up for sure, way over 700. But it was a wonderful quarterly. I mean, this is a masterclass on how to run a business in the right area at the right time. I've watched and listened to their quarterly reports for 20 years,
I was about to
and it's
say,
just
yeah.
amazing.
Yeah.
Yeah, it's an amazing business, stunning business. Do you know anyone who signed up for that ad-supported tier? I haven't even seen it. I'd be curious to
It's
see
not
what it looks
available in
like.
Ireland yet, I don't think.
I see. And also, it detected some. My son moved to Galway on the other side of the country here in Ireland, and it immediately knew he'd logged into Netflix somewhere else because when I switched on Netflix here at home, it hit me with, "Do you want to sign up for the
Yeah.
family pack?"
Yeah.
Whatever IP sniffer it has. So I just rang him and said, "Here, don't be using Netflix
How
over
much do you want this Netflix?
there."
It's going to cost you for
I
the
just
first
saved
time in your life.
$6 a month.
Yeah. But yeah, no, it'd be interesting. And what's interesting as well is that they're going to stop reporting subscriber numbers in Q1 of 2025. So this is the
Mm,
second last. Next quarter will be the last one. And
yeah,
it's basically saying it's not going to be the North Star of the business anymore. And we'll
yeah,
be judging on our
yeah.
financials and blah, blah, blah. And what's great to see is just how good of a state the financials are in when it moves into
Amazing.
this new reporting structure.
That's right.
So yeah, it'll be
Plus,
interesting to see how it plays out from there.
you're right. And what you wouldn't want to see is the customer numbers fizzling as
Before,
they phase them out. You want to see it just go out with a bang. The confetti explodes and they're right. Okay, folks, good night. We were Netflix. We'll talk to you about money next time.
yeah, I think that's the plan, anyways.
For sure. So what I was going to say to you earlier, Mike, was
For
a
rudely
business
interrupted you.
before yeah, exactly. So is Uber Expedia.
Yeah,
It's a fascinating story, and there's some big M&A rumors out there that we just can't ignore, as Uber might be considering buying Expedia. So talk to us about that a little bit.
yeah, it's interesting, isn't it?
Yeah.
I was kind of doing research for this over, like, looking at the last stories from the week, and like this one was just screaming at me. We had to talk about it. So The
Yeah.
FT reported that very early on now that Uber has been inquiring about a potential acquisition of Expedia. It hasn't talked to Expedia at all. It's just talked to its own advisors, kind of
Right.
figuring it out how it would work, what an acquisition would look like. For I assume everyone knows what Expedia is, but if you don't, it's a mega travel platform. I was actually shocked at how much of the brands it actually owns. Do you know what I mean? Obviously, it owns Expedia, but it owns it owns Hotels.com, Trivago, and Verbo, which I didn't know Expedia owned, which is the Airbnb
I
competitor as
didn't know
well.
they owned Trivago. That's quite interesting. I mean,
Yeah,
they really did a big marketing push here in Ireland on the television.
yeah, big time. So like all those kind of price comparison sites and booking sites, a lot of
Mm.
them fall under Expedia's remit. So the story is Uber approached advisors to see how a deal would look a couple of months back at around 20 billion market cap. Expedia would be Uber's largest acquisition by far, I think by almost 10x. I think
Mm.
Postmates at nearly 3 billion was the largest before this.
Yeah.
It's going to be a friendly affair because the Uber CEO Dara Khosrowshahi, he was the Expedia CEO before this for 12 years. He left Expedia to
Oh,
go
you're
to
kidding. I
Uber.
didn't realize that. That is very interesting. So
Yeah,
he knows both sides of the table. He knows what they're thinking.
100%, and he's still on the board as well. So
Right.
he would have to be like kind of absolved
Recused.
from dealing with
Yeah.
the, but like there'll be plenty of handshake deals. He's kind of, so Barry Diller from IAC, he owns like 30% of Expedia's voting power, and Kurosawa was his protege basically while he was at Expedia, because he's at Expedia for 12 years,
Right.
2005 to 2017, I think. Maybe longer. And very friendly relationship there. So if it did go through, it wouldn't see him a lot of stumbling blocks back and forth, if that makes sense.
Mm.
But yeah, as it stands, no formal approach has been made. Like there's no actual Uber and Expedia conversations. It's just Uber looking into it themselves internally, essentially. What I would say is that when you see a story like this get leaked, it seems quite intentional. Do you know what I
Yeah.
mean?
Oh,
So
for
maybe
sure.
this might be a sign of intent from either Uber or just kind of letting people know and get a bit of media hype around it to convince one party or another. I don't know.
Yeah. But it'd be a real step up for Uber's quest to build a WeChat like super app, wouldn't it?
Yeah, big time. I think that's where everyone's mind went when they heard the rumor that, okay, well, this is Uber's next step in building out this kind of
Mm.
everything app. And
Yeah.
they're not shy with their intentions of it at all. So
Mm.
Kuroshahi, he told the Financial Times last week, he said, I'm quoting this: anywhere you want to go in your city and anything you want to get, we want to empower you to do so. Now, that's not as extensive as, say, something like WeChat with messaging and payments and social media, but it's trying to
Mm.
kind of cover everything else. Do you know what I mean?
Yeah.
Like
Yeah. Yeah.
what Expedia will add in terms of functionality, it's extensive, and it would just take it up another notch or two. I don't know about you, but for me, Uber really comes alive when I'm traveling, and maybe that's because I've been living in smaller cities where it's less of a kind of everyday use app.
Mm.
Um,
Mm.
but like I wouldn't use it in, say, Galway or Beerus, but now I'm in London. I'm on the line bikes almost every day, or Uber, like you get your groceries delivered, or you need to get a lift somewhere and it's awkward, or whatever else. Do you know what I mean? It's like you're kind of almost using it as this like everyday function. And that's where it comes in. It wants to be this all
Yeah.
encompassing travel app. It isn't your companion. It's your companion, like when you touch down in London or New York or Paris. It's where you book the
Yeah.
hotel, the flights, the food, the transport. It can kind
Yeah.
of cover a whole trip within one app. It's that one-stop shop status for travel. And it stops people going from different sites to book a trip. So if you wanted to, say, go to London, you go to Ryanair, book your flight, you go to hotels.com to book your hotel, or you go to booking.com. Then when you get
Yeah.
there, you can get your Uber to your blah, 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 blah. If you're with this super app, you only need to go one place to do every single thing. So if I'm Airbnb or booking.com or even a top hotel chain, I don't want to see this acquisition go through, because all of a sudden a competitor like Expedia, which wasn't a major concern, is injected into an app people use every day in some shape or form. There was a great point made that like Expedia spends billions of dollars a year in advertising to keep your attention for what could just be booking, say, one trip or two trips, or if you're lucky, three trips, you know? And
Mm,
then Uber doesn't need to keep your attention at all, because you go to it for groceries or a lift or a bike. So Uber could benefit hugely from what Expedia brings, but it also bridges a huge gap in the travel industry in general, which is like one of attention. Uber could probably run Expedia for an awful lot cheaper than it is right now, because it doesn't need the advertising cost, because it has that attention already locked in. And that's what makes an attractive acquisition target is, oh, look at the synergies we can make straight away. So it is a
yeah,
really obvious good matchup.
yeah, yeah. Do you know they're all racing towards this destination or promising this destination? So whether we look at X, which I presume is going to do it in an entirely different
Yeah,
way,
I was about to say, if
or
X or Twitter says it's going to do it, for sure,
well, yeah,
I
yeah.
don't see
But
any
Airbnb,
route.
that this is true. No, yeah, it seems to be an amalgamation of disparate functions and technologies is the vision, but I wouldn't write it down or write it off by any extent. As we both know, Musk just generally pulls it out of the bag and makes everybody grimace on the route. But when I listened to the last Airbnb conference call, Brian Chesky, founding CEO, started to talk about a greater purpose for Airbnb and starting to diversify into sectors that heretofore they have not addressed. And he wasn't specific enough, but he was describing, to my ear, a what you said, like a super app.
Yeah,
And what you're describing for Uber is a travel super app. But when I think about um, diversification, through whether it's acquisition or organic diversification, my mind always goes back to Betamax being, or sorry, video players being integrated into televisions. So back in the 80s, you went and you bought a TV, and then you went and bought a VHS or a video player, and they sat separately on your cabinet. Then along came businesses with the resources to just combine them. It was easier on the eye, there was less cables, but for some reason, people wanted those two devices to be separate. They trusted, let's say, Sony for TV and Panasonic for VHS or whatever it was. And then when I bring it forward and think about MyWallSt, the business here that I co-founded with John, and that you and I have diligently attended to for very many years, Mike, we had a brokerage function that sat alongside some of the best stock advice in the world, and both are beautiful. But when you're two things at once, it's very difficult to be outstanding at one. And our brokerage wing was something that we realized, to be just a stockbroker, you need to be a stockbroker. When you scale it up and think about what we're discussing here, Uber's brand stands for, in my mind, you open the app, you press a button, a car arrives where
mm.
and when you want it.
Instant gratification.
Now, instant gratification,
Yes.
instant feedback. Would I trust it to book a hotel? Yeah, I suppose I would. But user behavior needs to change. I mean, Ryanair have been offering
Yeah,
users
it's a good
cars and
point.
hotel. Like, but do you have you ever booked? I mean, you are a traveler extraordinary. You go everywhere. Do you ever use Ryanair to book a car or a hotel?
No, no, I wouldn't even think about it.
Hmm.
I think
Same.
it's a good example, but I do think Ryanair is unique in that people
Yeah.
feel so gouged when they use that, that there's an aversion to just give it any more money. Like even when
Yeah.
I'm booking flights, I don't have my
Yeah.
bags until later, because I just feel like, geez, I have to pay to have my pockets full. I have to pay if I'm holding in a fart. Like literally, it's like the flights are a tenner, but it ends up costing €95 to get there. And it's like, how did that happen?
Yeah. Yeah.
So
That's
I
true.
do think it's a good example, but also Ryanair has a kind of like, people have a block against it.
Yeah.
And this
But
is
I
coming from
wonder
someone
though, and
as a Ryanair advocate who uses it all the time. I
yeah,
do not like giving them money.
yeah. So people go to their places. So
Yeah,
what
it's
Uber is
true.
going to have to do is upend you from that place you go. So you might go, right, in my world, I use Ryanair for travel, I use Uber for last 10 miles of travel, and then I use booking.com or Airbnb for somewhere to lay my head.
Yeah.
And that those three distinct blocks exist in your mind, just as back in the 80s you had a TV and you had a video player.
Yeah.
And
The other thing as well is you're just adding so many more steps
yeah,
to the supply chain, we'll say, of a trip,
yeah,
where Uber is very good at the instant gratification, but now it's in charge of booking something 4 months away.
that's true.
You know,
Yeah,
there is just a few more roadblocks. It wouldn't be as smooth, but it sounds very good. And that's, I think maybe that's a problem people have, is that, oh, you have this one app that does everything. You don't have to go,
yeah,
how much effort is it to go out of, booking.com to go check the Ryanair app and to go check the Airbnb app? It's not as big of effort as people think. So
yeah,
there's two
yeah.
sides to
That's
the
right.
story. I do think if Uber owned Expedia, it could run it for cheaper, which is
Yeah, for sure.
the most important thing. So you're looking at, say, I think it was 12 billion in revenue in 2023,
Mm, wow.
and they're like, oh, we can take that in at a much higher margin. And maybe it's looking, because it's at something like 80 times earnings at the minute. So maybe it's looking at, our stock price is sitting really pretty right now. What can we do with this? Could we get not an all stock deal, but some form of capitalization on our premium valuation? So
Yeah.
there's a lot of factors there at play. But yeah, it's an interesting one. It's very early on.
So
Again, we
it
don't know
is,
what'll happen.
but Uber's been on a hell of a run. Like the Uber shares have just been on the up, up, up. And what's been the key factor? Is it something to do with this or something else?
Yeah, I really think it comes down to the CEO. So
Yeah.
Dara, I've been butchering his name
Yeah. Dara
all
K. Just
episode.
call let's call him Dara K.
Dara Khosrowshahi, he took over back in 2017 from the founder, Travis Kalanick,
Yeah.
who seems to be an awful person.
Yes.
He took over what seemed to be a very toxic work environment.
He did.
Kalanick was basically forced out for his behavior, his treatment of staff. He ignored sexual harassment complaints. I think
Mm,
there was a
mm.
litany of stuff that
It
came
was
up against him.
grotty. Yeah, it was horrible.
Yeah. So it didn't look like a company that was set up for success. And since then, the journey's been pretty incredible. He obviously took it to the IPO in 2019. It was a huge IPO, but people were skeptical. I think it was actually a direct listing. Am I wrong?
Um, don't remember, Mike. It rings a
Yeah.
bell.
Yeah.
I don't remember. I can't
I
say
think
for
there was a
sure.
trend of direct
Oh, there was.
listings.
We had a good chat.
Spotify definitely
Yeah.
did one. I think Uber might have
Yeah,
as well.
that's right.
But
Yeah.
anyways,
Yeah.
but there was at the time, and definitely from 2020 to 2021, where there was so much private equity money in public companies, there was an awful lot of competition from Lyft
Yeah.
in ride hailing, and then about 10 different companies in food delivery. So it
Mm,
seemed like a bit of a race to the bottom. No company really had any real moat.
mm,
And then retrospectively, you look back and all these competitors, how they fared out, it's clear that Uber was the only one that was operating in a sustainable way. You can just look at Lyft's stock chart since IPO;
mm,
it's a disaster. DoorDash is still in the red, although it has seen a resurgence of late. But Deliveroo and Just Eat are struggling big time, and it's probably comes down to without exposure to the US. I'm not sure,
mm,
but it just
mm.
shows that we kind of talked down on Uber because it seemed to be in this unsustainable business model. Things were way too cheap. I
Yeah.
basically had a personal chauffeur in New York for about 100 quid a week. Do you know what I mean? Because
Yeah.
between Uber and Lyft, they had so many discounts. They were selling products at below cost, essentially.
Wow.
But it has
Wow.
it has developed. It has developed so much since then, and it actually mirrors a bit of the streaming wars. Do you know? We talked about Netflix and then all the rest, and Netflix was really depressed stock price for years because of it. But in the end, the company with the biggest oxygen tank
Hmm.
wins out.
Yeah, that's a fact.
Yeah, and so Netflix in streaming, Uber in this ride hailing, and now developed into so much more. So it posted its first profitable full year at the start of the year. Its stock has tripled since the lows of
Wow.
2022. It's now basically at all time highs, maybe all time highs last week.
Mm,
And this long standing concept of an everything app, I believe, is closer than ever in terms of what we can achieve in, say, Western culture. Like, it's not going to be anything like WeChat, but
mm.
if there's any company that's close to it, I do think Uber is, in terms of the everything else app.
That is actually fascinating because WeChat has proven that an everything app works. And so, whatever about my my VHS and television analogy, as old and dusty as that analogy is, it has been proven that the combined TV and video works in China with a modern day super app. And you can go into one place to book your food, your social networking, communication, all that other stuff, even seeing a doctor, one single app. And I find it very interesting that you would or see Uber in as I suppose the Western world's forerunner to getting there. That's really interesting.
Yeah, well, yes and no. Like, as in the sense of it's never going to be at that scale. They're never going to be able to
No.
incorporate payments and social media. They're always going to
Yeah.
be separate things.
Yeah.
And we've seen, like, as in, Facebook had goes at bringing in payment networks and everything. I was like, no, no one's going to trust that. And the shopping, like, there's going to be just things that are separate.
Yeah.
But I do think, in terms of what Kurosawa said about, you're in your city, you want to get somewhere, you want to get something. Uber is the app for that. I do think that is a realistic future. I think Expedia could expedite that. Could expedite that notion of that concept. I don't think it's fully needed in general. I think Uber already has a good relationship with Hopper, which is basically a smaller Expedia competitor, and it could probably develop its products in such a way that it doesn't need this big acquisition to do so. But
Yeah.
if the choice is there, I don't think it'll be a bad one long term. So yeah, that's the story with Uber. It's an interesting story because we did
Very interesting. So
talk down on it.
Uber, buy, sell, or hold with a 10-year horizon, Mike. What would you do?
The valuation is awful right now, so
It
I wouldn't
is,
go
yeah.
near it.
Interesting.
If I owned it, I wouldn't sell it, but I
Yeah.
wouldn't go buying it at 85 times earnings.
Right, Mike. Well, that was a very interesting conversation. Last week, or the week before last, Anne-Marie, we were finishing the show and we just looked at each other. We weren't sure what we're meant to do. I said, I just looked and said, okay, that's all I've got. See you, good luck. And she was like, goodbye. So
There's not much. There's not much to say. Thank a few people.
oh yeah,
Actually, it's a good reminder,
oh
because
yeah.
we should do this every month. Is anyone listening who's enjoying the show, whether it's on Spotify or Apple Podcasts or anything else, even YouTube, just make sure to give us a review or a thumbs
Five
up or a
stars.
like.
And if you haven't
Five
got five
stars
stars
only.
in you, don't do it.
But it does help the pod.
Yeah.
But
it does.
yeah, Emmet, thanks for joining me, and everyone, thanks for listening in. We're going to talk to you next week.